Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Good to be back after a week and a bit away over in Europe, and very, very happy to be home. Had a fantastic trip, but always good to be home. Today we're talking about day 3 longs, day 3 shorts, first red days, 3-day setups, and 3-session setups. We're going to walk through a couple of trade setups, specifically my trade from the New York session today, but the main important thing to understand is focusing on 90-10 setups. Now, I get a lot of emails and questions regarding, is this a first red day? Is this a first green day? I don't understand what you mean by day 3 longs. What's the difference between day 3 longs and Monday's day 1? And I'm confused. So listen close. There are 3 types of setups, essentially. There are 3-day setups, which can be any 3 days of the week. It could be a Tuesday, Wednesday, Thursday. It could be a Monday, Tuesday, Wednesday. It could be a Friday, Monday, Tuesday. That's a 3-day setup. We have day 3 longs and day 3 shorts, and that's when we have day 3 of breakout traders in the market. Write this down. Day 3 breakout traders in the market. That is different than a 3-day setup, and you'll see why. And that is important because that can end up evolving into a first red day, first green day. It may sometimes just be a session trade, and it may not eventuate into anything at all. Remember, these are trigger days. This is why hindsight pays, because you need to understand what setup is evolving in the market. Then, of course, we have Monday to Friday, the template for the week, the opening range and initial balance, which can meld from one week into the next, which is why we will have failed breakouts at the highs and lows of weeks, which can begin our day count again for a 3-day setup, or that can begin a larger move for a 3-day parabolic, and we'll talk about that today. All of these things are broken down specifically in the playbook, so if you're still struggling with things, pay attention today. Go back and study these. It's very simple if you step back and understand the big picture. The breakouts, the daily highs and lows, the weekly highs and lows, Monday, Tuesday, Wednesday, Wednesday, Thursday, Friday. These are all very specifically defined. So if you don't see something cleanly engineered on the chart, don't trade it. You're looking for easy to recognize textbook pattern pump and dumps or dump and pumps. Which brings us to today's New York session trade. Now, we'll just wind this back a bit. We have the previous week broke out on Friday on Bank of Japan. We'll blow this up a bit. So Bank of Japan, you'll notice if we get rid of our number box for a second and just have our daily highs and lows, we have a weekly high from our Tuesday. Tuesday puts in the high and low for the week, and then they go inside. Peak formation high, peak formation low, consolidation heading into the Bank of Japan, and we get a vertical explosive move on the Friday. That begins our day count. Day 1 breakouts in the market. Now, I know there's going to be traders say, well, this was day 1 down low, but understand what we see is inside consolidation. So theoretically, I'm looking for the day count that starts the beginning of our move. This explosive move first pins the low of the day, triggering faults, breakouts, hitting stops, whatever you want to call it. We by all accounts have a double inside day. We trigger shorts first before going vertical on the Bank of Japan. But understand, all of that's semantics. When we know that we have day 1 breakouts in the market, day 1, day 2 breakouts on our Monday. So we're into the new week. So remember, we're looking at what happened yesterday. Day 1 breakouts are in the market. Day 1 longs. Day 2 breakouts in the market. Day 2 longs. And on our Tuesday, we have day 3 longs in the market. Day 3 longs are in the market. Let's take a closer look at that. This is a 5-minute chart, and we have day 3 longs in the market. That market gives a short trade in the London session. Now, I'm trading mainly the New York session. Now, we're talking about understanding the opportunity that presents in the session that you're trading. We have a market that has now broken down on the inside, heading into our New York session. Day 3 longs are in the market. This is a Asia, London peak formation high, peak formation low, 3 session setup after day 3 breakouts for a parabolic short trade. Low-hanging fruit headed into our U.S. window. Now, the only issue is we had major red news at 10 a.m. New York time, the JOLTS news release. And so if traders were to enter this trade before the news, they would either have to be out just prior to the news itself, or, well, I wouldn't be trading prior to the news itself, or be willing to take positions out, maybe leave a trailer looking for the blow-off, or take the first bounce entry after the news release for a 25 to 40 pip, no stress, short trade after the news was released. Obviously, no volatility on that news candle, but the market continued to fulfill that 3-session reversal after day 3 long breakout trades were in the market. We had a broken down market. Traders that may have shorted this in the London session got a 50 pip plus short trade, maybe 75 pips, depending on their fill and where they got entered in at. And this is the continuation trade after the day 3 longs breakout failed. Now, this is an unusual weekend that we have major red news every single day throughout the week. And so obviously the U.S. session in particular has news every session. London and Asia may have had opportunities where there were no news, and traders may have had day 3 reversal trades. We may have had first red day session trades in Asia or London, and we'll take a look at a couple of examples of those. But the U.S. session in particular, whenever I have major red news, for example, 10 a.m. ISM services Wednesday, to me then in New York Open 9:30 then automatically goes to 10 a.m., which means I will look at the 10 a.m. news release as a first potential area of getting into the market. I will not trade before the news. So in this particular case, Euro Yen on the day 3 breakout reversal trade, I would have had to wait until after the major red news. It's nothing for them to throw a 25, 50 pip wick up. And even though it seems like a clean chart, one wick can wipe you out instantly. And your fill will have slippage in that stop out. That gives us our first red day. First red day is a day that closes below the open. And you'll notice again, peak formation above the previous high, breakout failed, closes below the open of the day. Day 1, day 2, day 3 engulfs, closes below the open. That gives us a thesis for a sell high of the session, high of the day opportunity, either in Asia, London, or New York. Could be a 3-session setup. It could be a session scalp, if indeed it presents. First red day, same process always applies. Peak formation low, peak formation high, consolidation. And we look for the trade if indeed it presents. We have our peak formations. We have a 25 pip box, 3 levels in between all 3. The market consolidates before pumping up into our peak formation high in that first hour. We have our consolidation. We talk about this in the playbook. Drawing your highs and lows, universal entry criteria. Remember, now we're on the back side of the move. First red day puts us on the back side. Day 1, day 2, day 3, front side. We're on the back side. We have our consolidation, the pump up, and our entry on the 5-minute chart for an easy 25 pip plus move. No stress. Asian session scalp on day 3 of the Monday, Tuesday, Wednesday template. Day 3 of the week now. Day 3 of the week, Monday, Tuesday, Wednesday. And we have our short trade on our first red day, signal day, being on the backside of the move on the failed day 3 breakouts. That brings us to today's trade. We had the Fed on Wednesday night. Day one is our failed breakout on Tuesday. That starts our day count. First red day. That begins our day count. That's the failed breakout at the high of the week. Day two breaks down further after the Fed and closes as a breakout day in the short direction, which brings us to today, our day three opportunity heading into the U.S. session. Day three. So we have our consolidation established over the course of the day. Heading into our U.S. window, we had major red news in the U.S. session. We had unemployment numbers and then the ECB press conference at 8:45 a.m. New York time. We see a basic consolidation. So remember, we can talk about numbers and everything else, but we have peak formation, high, peak formation, low consolidation. The market breaks down in the beginning of our U.S. session window on unemployment numbers before going vertical. But remember, lower low on the inside. Day three, lower low on the inside is the setup for the pump and dump. The pump and dump setup. So there's only two types of trades when it breaks down to its simplest form. When an entry will occur, it will either be a pump and a dump or a dump and a pump. We had the ECB pump it up into our press conference, and then the most important time after the news is over and no other news on the calendar or on the schedule within the next few hours is, of course, the New York equity market open, which is 9:30 a.m. New York time. And this market gave an excellent opportunity after the New York market open, beginning on the 1-minute chart. This is a 5-minute chart. And once you understand the setup and the levels, you have no problem getting in on the 1 minute. You're paying attention to time. The setup and the entries begin 6 minutes after the New York session starts to open, and that continues into the close of the 5-minute candle, at which point we are fully positioned, and there are two ways to potentially measure a profit target. We have a range expansion of possibly 2 times the range, but also coinciding back with where this move began, major round numbers from the Bank of Japan pump on Friday. 50 may be a major area of potential support. A measured move of body to body gives 2 full range expansions just below 50 for an easy exit of 75 to 100 pips, depending on where traders took profits and where they got filled. But again, an easy, low stress, day 3, vertical blow off, 3-session setup, parabolic move after major red news at the New York equity market open. A very similar setup on the S&P. Day 1 breakout longs on Thursday. Day 2 Friday. Day 3 on Monday. New week, new template. Day 1, day 2, day 3. First red day. That first red day gave traders a massive shorting opportunity after the news release on Tuesday in the New York session. New York equity market open. Major red news at 10 a.m. for a vertical blow off. And that also occurred on the DJ30. 15-minute chart, day 1 breakouts on Thursday, day 2, the stair step up, the escalator up, day 3, first red day, split the box, breaking the low of Monday's low on Tuesday for the elevator ride down, a massive trade. These are the types of trade setups that will explode your trading account. No stress. A lot easier than some of the other trying to just figure out every day this gap, this liquidity hunt, what I get all these terms from traders. I have no idea. Keep it simple. Day 1, day 2, day 3. I'm looking for parabolic opportunities. These are the trade setups that are easy. Then we come down. Day 1, day 2, first red day. Day 3 blows off on the Fed and continues to break down on Thursday. So we have day 1 shorts. Day 2 shorts, and now day 3 shorts in the market. No idea what it will do tomorrow. We have non-farm payrolls, but we have had textbook clean opportunities with day 3 breakouts and first red day reversal trade setups and day 3 parabolics just by following and being patient. The simple steps. Keep it simple, traders. 1% better every single day. These are the trade setups that will explode your trading account. Keep it going, keep it growing, and may the markets go with you.